See, Ayesha, even if you're wildly bullish or you've been wildly bullish in the market, it's difficult to keep up with the pace. The market rise has been nothing short of extraordinary. Now we can talk about, okay, the pace has been extraordinary. Things are now reaching what could be called as a euphoric and overbought level. It's not. It would be dangerous to stay invested in this market. Frankly, that bearish narrative at the moment I think may not be the right narrative. We must understand the phase of the market we are in. That is the most crucial thing. The phase of the market is that right now there is FOMO, there is liquidity, there is global strength, and now you got the heavyweights which are firing full cylinders. So let's establish that. I'm going to establish that. Let's look at first Reliance and HDFC Bank and the Nifty. Now we may talk about Nifty at an all-time high. The pace of the rally from the April low is quite extraordinary. But in YTD basis, which is what really matters, Infosys, which is a heavyweight, is down 11%. And HDFC Bank, this is despite the surge what we saw on Friday and yesterday, is up only 5%. Put in a Reliance there. Reliance in this year has only appreciated by 2%. So the three heavyweights, Reliance, HDFC Bank, and Infosys, they've not contributed. And they've just started moving. Now, if the sumo stocks, they start moving, they can pull a lot of weight. You cannot have this kind of a severe underperformance when the banking sector is doing well and the merger issues have been sorted. That's HDFC Bank for you. Reliance has to be part of allocation if flows are making a comeback. And Infosys, well, it's a toss-up whether there is value or whether it is a contra bet. So I'll leave Infosys aside. So the limited point here is that what we've seen in last 2-3 trading sessions is that the sumo stocks have come and they are really leading it from the front. So you don't get bearish when the sleepy heavyweights which have been hibernating, they've just come out of their slumber. I mean, you can become bearish for the sake of bearish, but that is not the best strategy to do.
Yeah, even if you look at India's performance vis-a-vis the rest of the world, we seem to be in a good stead. And we were just looking at the 1 month as well as the 3-month charts, right, last evening. We seem to be in pole position.
So it's not that we are the best performing market.
There is a lot best, but one amongst the best.
The point I'm trying to say here, Ayesha, is that it appears that, okay, you've had a great rally and this rally all-time high. So there is a narrative of an all-time high, but frankly, there is a lot of global undercurrent which is strong and supportive. And what we must recognize though, so we are not isolated. If you were only market which was going up in isolation, then there is time for you to worry. Nasdaq is up 32% here. And Japanese Nikkei is also up by about 6%. The only red mark I can see is Hong Kong, which is largely because of what is happening in terms of the Chinese market and its repercussions. Now, why am I bringing this data out? Glass half full or glass half empty? I would say the glass is half empty, but it will become from half empty to full. Why that will happen is because India is not the best performing market. B, flows have just about made a comeback, and a market like Taiwan, which is technology dominated market, has done well, and even a market like Korea I think has done well. So just imagine the narrative. Other global markets are not an all-time high, we are at an all-time high. Global flows in equities are strong. The India narrative has been the strongest ever, and we've not had an extraordinary year. So flows have just about normalized and this market has just about started adding muscle. So from a foreign institutional standpoint, you would look into India and say, okay, I want to be in India. India is not the most expensive market. It has not done what other markets have done. And guess what? The net flows, if I look at in last 1 year or last 2 years, is still negative, which means I need to load up. I mean, that is, performance will always attract more money.
But that seems to be, changing, Nikunj, at least going by the kind of FII trend that we've seen in the emerging markets. India, in comparison, has been fairly healthy. In the last 10 days, for instance, there's been about 2,000 odd crore rupees that the FIIs have pumped in. Even on a month-to-date basis, you've got 3,400 odd crores. And India has been, on a year-to-date basis, as you said, perhaps not all that impressive, but on a year-to-date basis, close to 7,900 crores, which maybe in comparison to Taiwan is a little bit less, but in comparison to some of the other emerging markets has been fairly resilient. Okay, what are the global markets up to this morning? It was a shortened trading session when it comes to Wall Street, largely ahead of the 4th of July holiday, but you did have the Dow Jones, which ended flattish with a positive bias, ditto with the Nasdaq as well as with the S&P 500. This morning, Asia is looking a little bit tempered. It's a little bit mixed, you could say. The Kospi is in the red. You've got the Shanghai as well as Hong Kong index, which are just about flat in trade. But let's find out what the other key trigger points are when it comes to our own markets. And monsoon, etc. aside, you also have the Q1 updates that are trickling in. And so far, here's what it indicates, that Bajaj Finance has come out with the highest ever quarterly AUM for something like an Avenue Supermarts. They have been struggling off late, largely in line as per what the indication is from the market, from the company. V-Mart has come in below street expectations, and Vedanta and Hindustan Zinc, Nikunj, are sequentially weak.
So let's keep Vedanta and Hindustan Zinc aside, because that's metals, and frankly metals you should not look at quarterly numbers. For me there are two numbers which really matter. One, Bajaj Finance, and what kind of indications we are getting from, let's say, other banks. Now Bajaj Finance has a large base, and this base, on that large base also, what they've reported is the highest ever quarterly AUM growth, which is much above what they've actually guided for. So it is in 30s and they are guiding for late 20s. There are two reasons why Bajaj Finance is moving. One, first, you cannot have this kind of a growth if the economy is not doing well or if the consumer demand is not strong. So it is largely because of the underlying demand of credit and underlying demand, at least at the retail level. We, of course, Bajaj Finance is firing full cylinders. I mean, they are gaining market share. The risk management is excellent. They're growing without raising capital. So these numbers, in a sense, again endorse the fact that why Bajaj Finance is commanding this kind of a premium. It's like saying, if you are going for a flat in Nariman Point versus a flat in Andheri, a 3 BHK in Nariman Point was always expensive and will always command that premium. That is Bajaj Finance for you. Okay. On this kind of a large base, they are growing at 30% and beating the guidance handsomely. Of course, there is a massive tailwind, which is the economy and the retail credit. But within that, I mean, we looked at L&T Finance yesterday, right? Yeah. They've struggled.
Yeah.
We looked at the Birla Finance yesterday, they've struggled. Last 3 years or last 5 years or last 10 years or last 15 years, whichever cut you want to take it out, Bajaj Finance is standing tall. So that Seaview wala apartment in Nariman Point will always be at a premium.
Yeah, clearly it's that apartment, isn't it? And